The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the September 16th marvelous Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Hope everybody had a great weekend out there. Let's go take a look at one of our tools. This is the tool I call starting the process of change. You know, the biggest challenge that each of us face is personal development. And the process of change, well, it begins with the understanding it's not what happens in the world that determines the major part of our future, because what happens to one of us, guess what, folks? It happens to each of us. The process of change, that begins when we break our old patterns. And that means doing something different than what we have already done. Do something different. Become an explorer out there. If you're looking for more out of life, then realize that what we have in our life right now, right at this very moment, right here, is everything that we've attracted into it because of the person that we have become. If you want more, guess what? It's simple. All you've got to do is become more. Maybe it's a book. Maybe it's a workshop. Maybe it's a class that'll get things kicked off for you. Change begins on the inside. It's always our way of thinking, folks. Don't wish that things were easier. Just simply wish that you were better. Don't wish for fewer problems. Wish for more skills. Talk about change. Let's go check out these markets here right now. Dow futures up about 160 points or so, trading out at 15,468. The ES Mini S&P futures, they're up 17 points, trading out at 1699. Nasdaq futures up 25, trading at 3196. Russell 2000 up 12 at 1061. King dollar back about 49 ticks or so, trading out at 81.14. We've got the euro is up. We'll check out the euro for sure. Goldilocks up $11 right now. Now, Goldilocks opened up last night. It was up, I don't know, $25 or so. Came all the way back. It was maybe up about $2 or $3 just maybe a half an hour ago. But it's up $10 right now. Silver up 34 cents. That's the bigger of the movers out here, up about 1.5%. Light sweet crude back about $2, trading out at 106.26. Hey, the next buying opportunity could be just around the corner for light sweet crude out there. If we take a look at what's going on around the world out here, and we're certainly going to peek in on the FTSE over in the UK, because that is up 57 points. But the key is that it's breaking out of a descending price channel out there. So we're going to look at the FTSE. The DAX is up 107 points. I think the Nikkei was closed last night. So we won't pay attention to them. Our call-in number, 877-927-6648. You can give us a call. Be happy to take a look at your stock, answer whatever possible question that you might have out there. Let's start off. We don't normally start off this way, but let's start off by taking a look at the Dow futures. Now we're going to take a look at the bigger picture out here, because we've got a market that is going to gap up this morning. Futures are pretty large. Let's get a feel for what's going on. You know, I mentioned that the FTSE, and we'll take a look at that after we look at the Dow chart, that the FTSE is now breaking above a descending price channel. Well, if we take a look at what the Dow futures are doing, they're actually breaking back inside the rising price channel. The rising price channel, this is the one that goes all the way back to the November 16th area. If you're watching us on TigerTV, thanks so much for doing that. Hopefully, we've got a number of new folks watching us in the Tiger's Den, because it was a beautiful thing while we did our $10,000 virtual trading competition. So many folks got to see all of our charts in HD. HD out there, and that'll be helpful for you. But thanks for listening in, whether it's on the radio or your mobile device at TFNN.mobi. Remember, the show streams live to you. If you'd like to catch it, just take your smartphone device over to the homepage of TFNN.com. Over on the right-hand side, upper right-hand section, you'll see the button, 3 little smartphones. Click on that. This show will stream live. You'll be looking at the Dow futures contract, the daily futures contract, the blue diagonal lines that you see on the chart there. Those blue diagonal lines, those represent the upper and bottom boundary lines of the rising price channel. Price broke through it, and you can take a look here. We only saw price break through it for one day. That was back during the sequester talks back on December 28th. Price got back inside. When price got back inside, guess what it did? It ran all the way back up to the top of that rising price channel. We can see that it did almost the same thing back here in June 24th. The low of that rising price channel was tested. Price never broke out of it. Price went ahead. It couldn't bust it down. It tried to go ahead and bust it up. We then did see price break with conviction all the way out of that price channel right around August 16th. And price came right down to the natural area of horizontal support. Now, we're taking a look at diagonal support and resistance. Horizontal support and resistance is much stronger than the diagonal, but nonetheless, what we are taking a look at as we speak right now doesn't mean that that's how the day is going to finish, but it is something that we want to pay attention to, because should the Dow be able to hold these gains out here? Should price break back into it? And then, if we can see the Dow, which has made one big move here, talk about the rubber band stretching and then bouncing back, that is certainly what we've seen the Dow do here. You can see that coming off of the high from August the 2nd all the way down to the low that was finally put in here on August 28th, that what we are also taking a look at is prices not only back inside the rising price channel, it is also above the 0.786 retracement level, which is about 15,417. What does that mean? That means you close about 15,417 today. It should go up and it should test that swing point. That swing point again being the August 2nd level, and that is 15,592. But if it does that, boy, that'll get well inside the rising price channel, and that would send price probably moving higher. Where to inside the Dow? Well, let me go ahead. Let's just take a look at a natural area, which would be just an expansion of swing points. That would be the August low or high to the August low out there, and the expansion would take you into, it looks like about the 15,833 range. One thing at a time. First, price needs to stay inside the rising price channel, and remember, the Dow was the weak link, so it's important for us to be paying attention to the weak link and see what it is doing, just as it's also important to take a look at what's going on inside the strong hands out there. And the strong hands at the moment, that is the NASDAQ futures. If we take a look at the NASDAQ futures here, you can see that price right now, this is the same rising price channel. This is coming off of the lows back here, back in November. Now, it's the same from the standpoint of we're utilizing the area where that rising price channel began from. It's going to be different, obviously, when we take a look at price. But what we can also see out here is the last time that we were up into the rising price channel, that was back here on September the 10th. Price had moved towards or almost into the overbought condition. Just simply worked its way off by moving sideways out there. Right now you can see, now, in this case here, price is rising. So for price to get above that rising price channel, no big deal. That's not a breakout. It can't be breaking out in a direction that it's already been traveling in. It could only break down, and the NASDAQ futures at the moment not showing us any signs of breaking down. We certainly want to be paying attention to this chart as well. I did mention the FTSE. Let's go take a quick peek over at the FTSE, see what it is doing out here, because we've got this one world, one connected market out here. You know, the FTSE, what it had completed was a 0.786 Gartley sell pattern. That's the light shaded blue pattern that you see out here on the screen. Number of patterns that were also going on inside the FTSE was, we can take a look at a descending price channel that was out here. In the case of the FTSE, you can see those are the blue diagonal lines to the downside, and the FTSE now breaking above that with some conviction. A nice wide-ranging bar as we speak today. Still a couple more hours. I think in the FTSE another 2 hours and 15 minutes worth of trading. So it's going to continue to get its cue here from the U.S. markets. What the FTSE has also done here this morning, it's trading inside the August 2nd swing point. You can see we're talking about our August 2nd swing point when we take a look at the Dow. So you can see how all these markets here in the world moving together. That says that the FTSE should go up and test the high of that level being 66.96 out there. So that's on the FTSE. Let's go see what the DAX is doing here in the market as we speak. The DAX is up over 1% this morning, and the DAX is up and over its May 22nd high out there. Now, that's if our markets, if you take a look at the S&P 500, Dow, really, I think everything except for the New York Stock Exchange, I believe. We'll have to go back and take a quick peek. We'll have to see how Stevie's mind is out here. But in the case of the DAX, May 22nd was its swing point high, not August 2nd like ours. May 22nd was a key level. The DAX now breaking out above that area. What does that set up? Well, it sets up potential A to B equals CD. I don't know what the volume is behind it, but if we take a look at the A to B equals CD pattern inside the DAX, the A point was down here at the lows of April the 19th, the B point May 22nd. The C looks like about a 0.786 retracement. That was on June 24th. 1-to-1 A to B equals CD. Inside the DAX would take you up in about the 87.94 range out there. So it looks like that is the move that is underway here. So we got the FTSE breaking out above a descending price channel. We got the DAX breaking out above its swing point highs out there. I did mention the New York Stock Exchange, so we might as well go over and see if it is the May 22nd level. And it most certainly is. So it's May 22nd inside the New York Stock Exchange. That price point looks like about 96.95. New York Stock Exchange closed out at 96.36 on Friday, so being able to get above 96.95 should be able to do that here at the open out there. Of course, the actual swing point, let me see if it's May 22nd. You have 96.90 on August the 2nd. So New York Stock Exchange, and that's going to be important for us to be paying attention to. Why? Well, I'm glad you asked that question. Let's go take a look actually at the monthly chart here for the New York Stock Exchange. Just happens to be the weekly. As long as I'm here in the weekly, why don't we actually stay here? If we take a look at the New York Stock Exchange on the weekly, not only did it have a daily key reversal session, which was on May 22nd, but the entire week of May 24th out there, the entire week, how can there's 4 weeks in the month out here, but the week of May 24th, 2013 was a key reversal week. If price breaks out above that level, that's a level of resistance, and old resistance will do what? That should become new support out here. So support, resistance right now, 96.95.46, but looks like the NYSE should get above that level. If it stays above that level, that becomes the new support range. The other thing here inside the New York Stock Exchange, now let's go over into the monthly chart out here. Give me a moment, we'll pull up the monthly chart. If we can take a look at it, coming off of the highs back here in 2007, if we take a look at the retracement level, what we will see here on the New York Stock Exchange, it is well above the 0.786 level, which looks like it's about 9,059. So it is well above that. You get above the 0.786 level, that says that you really want to go test the high of the swing point. Well, in this case here, that'll take you all the way back into the New York Stock Exchange back in the October 2007 area. The low of that is 98.24. Once you see it close inside 98.24, that's what will give it the free rein to go all the way up to the top. It's going to be a very interesting trading session. At least that's what Schultze says. Stevie's son says that as well. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors.
TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and to discuss trading strategy. For all the information and to take part in the Tiger's Den open house, log on to TFNN.com today. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's see, pre-market movers out here. We've got Package Corp, PKG is the ticker symbol, $2 billion acquisition that they have done here over the weekend of Boise Inc. Closed at $54.65. They say the move should be accretive right away. It is trading out at $61.10. We've got Sohucom Communications, SOHU is the ticker symbol. They closed at $64.75. They're trading out at $69.01. So those biggest dollar movers in the marketplace, AstraZeneca, AZN, they closed at $50.65. They're trading right now at $51.82. To the downside, Kihu 360 Technology, QIHU, they closed at $87.86. They're trading down about $5, trading out right now $82.30 in the pre-market. Apple's trading down a couple of bucks. They closed at $4.65 basically. Last trade fired off at $4.62 and some change out there. So a little bit of pressure there. Cooper Tire, CTB is the ticker symbol there. They closed at $33.22. Their last trade fired off at $31.83. I don't see what the move. Cooper Tire and Apollo merger faces hurdle. Okay, so it looks like they've got an issue out there with that. Now, let's go. I still have the New York Stock Exchange monthly chart on the screen. Now, the month is far from over out here, but Last month, the month of August, we had a little dark cloud cover. Dark cloud cover candle, folks. That's it's much like when you see a storm off in the distance. You're not sure, are there more clouds? Is the atmosphere changing? And are we going to see a storm overhead? So right now, that dark cloud cover, you can see that is being eclipsed here. That storm is moving away. Of course, if we get above the May 31st level at 96.95, that storm will have fizzled out altogether. Of course, it's still, we're midway through the month. It is September the 16th. Hey, speaking of the month of September, September 27th, 2 weeks from, a week from this coming Friday, I'm going to be holding a Master Trader Series course. The details are on the homepage of TFNN.com, and I will be teaching you all of the best tools out there. And what I mean by that is, I am just like yourself, for many of you out there that are maybe new, or you've been experiencing technical trading, you're trying to add tools to your arsenal out there. I don't know if you've ever done this. Have you ever entered a trade too early? Have you ever done that? I know that I have. I used to be much more susceptible to entering a trade too early. I studied all the great patterns out there, whether they were A to B equals CD, swing point analysis, Fibonacci, expansion, contraction, Gartley, butterflies. And what I found was, much like Thomas Edison, when he created the light bulb, it didn't end there. Other people took what he did and they made it better. And that's really what I've focused on, is not just understanding the pattern recognition, the patterns that we're going to set up, but when to actually enter the trade. Because at first it used to be, I'm just going to wait for that pattern to set up and boom, I'm going to fire away. Then I found out that, sometimes price doesn't just stop where that first pattern, because there's another pattern, whether it's a 0.618 retracement or 0.786, or it's going to make the 100% move of a move, or maybe because only the A to B equals CD completes 60% of the time around the 1-to-1, what happens the other 40%? So I made it my mission to go study each of these patterns and figure out what is it that was actually missing so that you didn't enter the trade. Because when you do enter a trade too early, folks, I don't know if you've ever done that or not, but when you do, sometimes that trade, if you don't use stops, and that's another thing that I had been a culprit of doing, so I don't know if you've ever, hopefully none of you have ever done that, but if you had, then you know the pain that comes associated with doing that. And that pain is that sometimes you believe that maybe your trade is going to be the trade that's going to turn it around. Have you ever felt like that? Your trade, if you went ahead and sold, that all of a sudden the market would stop going, if it's going to, it would stop going against you. I don't know if you've had that experience before. What I do know is that really is not the way that it works in trading, no matter what it is that we might think out there. And what happens is you can let that trade get away from you, and then all of a sudden the trade becomes what? That's right. The trade becomes an investment out there. So if you would like to learn, if you would like to avoid getting into trades too early, if you would like to understand those patterns out there, then go ahead. You can sign up for my workshop. But again, it is next Sunday. Cost is $5.95, but that's an early bird special. That is only going to last through this coming Tuesday. Basically, it works out to be less than $2 a day out there. So if you want to create your own money tree, I want to show you how to be able to do that. I'll do that during the workshop. Also, you get the 1 month subscription to my newsletter service, Mastering Probability out there. Remember, you get the take advantage of the early bird special. You want to sign up now. 877-927-6648. We get back. We're going to go see how these markets are going to pop and whether or not they're going to drop. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We got the Dow up 151, trade out at 15,526, S&P up about 16 at 1703, Composite up 30 points, trading at 3751, Russell 2000 up 11. That's the biggest mover in the index market. That's up over a little over 1% right now, trading out at 1065. Apple back $6 and change. Microsoft up a nice 45 cents right now. Google up $5. Cisco up 6 pennies. Intel up 21. Lead the charge to the upside is PKG Packaging Corporation up $5 and change. That's a nice 9%. Sohu, that's up about 6%, up $4. You've got Baidu up $3 and change. Of course, Boise Cascade, a premium out there, looks like about a 26% premium. Allegheny Technologies, ATI is a ticker symbol. They're up about $3. You've got Boeing, BA, that's up $2.50. IBM is up $2 to the downside. Apple leading the charge. Qihoo 360 Technology just behind them. Apple's off $5 and change. Qihoo down about $5 as well. We've got Cooper Tire. They're trading off. Again, our call number 877-927-6664. You're going to switch over to the EKG of the markets. We're going to take a look at the 30-minute chart out here. That is of the S&P 500, the futures contract. Why? Because, we had a big gap up that took a lot of energy. You can see here this morning as it was really late last night as we saw that market move. And the market move, I don't know. It was the timing of when I first got my first signal on my phone that Summers had gone ahead and pulled his name out of the hat for running to fill Bren Bernanke's shoes out there. Said, "Oh, here goes the futures," and sure enough, they were off to the races. Of course, you can see here. And here's the cool thing about taking a look, in my opinion, taking a look at the EKG of the market, taking a look at the 30-minute and utilizing that momentum indicator, that relative strength of the index as it works. It doesn't really matter what the news is behind it. When you see a market get into an overbought or an oversold condition, in this case here, certainly overbought, right at the open last night, it has to work that condition off. And we can see that's exactly what it did. By the time frame of 7 p.m., last evening, all the market did was move sideways. Why? Because it was in that extreme overbought territory. And so it works sideways. It is pulling back right now. The first key level of support is going to be if the market pulls back to the gap up, to the open. That first gap level, about 1692. Looks like you're at about, I can't read that chart. Let me switch over to a different spot here. Let's see, I'm working in a couple of different mice here. So I got mices running all over the place. So we've got the S&P futures right now out at the 1696. So 1692 is going to be the first area for us to determine whether or not that is a support level here. You can watch that little red line on my screen. You can watch as it goes ahead and it pulls back. As it approaches that 30 level, we'll see where price is at. We'll see what kind of volume. We'll see if this is a pop and drop. But right now, all that's really going on, you can see how the market, using that EKG, how it got in that overbought level. That's why you don't chase things. What you want to do, you want to be buying when that red line is down towards the bottom. Of course, it's a little bit more than that. And that certainly is one of the things I'll be teaching during that Master Trader workshop. Of course, that is on Friday, September the 27th. If you can't be there, remember that can be archived on your members page. So, no reason to not take it. So let's continue taking a look at some of these stocks here that are popping and dropping. Let's take a look here at Apple. Let's go see what it is doing. Let's go over. In fact, we'll go take a look at the core charts and see what is going on with inside each of those. Of course, as soon as I've got to find it, there we go. Core charts out here. So let's go take a look at Apple first. As we take a look at what price did last week, right now Apple's down at the 0.618 retracement level. What I've identified here is a support area. I'm going to go ahead and pull this back here. And so this is where Apple actually broke out. Now, we take a look at that breakout session. Was really on August the 13th. Now, when you have price coming back into a breakout area, your first level is going to be the actual breakout candle. But what you really want to do is you want to go back about as far as you can to identify the lowest volume session. It's really going to be within a couple of sessions out here. In this case, it was much easier to identify because it happened to also be a swing point. And that's the swing point inside Apple from right here of August 9th. That happens to be where price is trading back inside of. So the actual breakout session with inside Apple was with 31 million shares. Now, as it pulled back, as it gapped down into that area with too much volume. You wanted to see it pull back with less than 31 million shares. What did it do? It came down with 32 million shares. That was on September the 11th. Volume, though, had dissipated quite a bit. If we take a look at Friday's volume, you were 10 million shares coming back into the trading session that had about 13 million. So today's going to be an important area. We'll get a piece of information from Apple as it gets down and tests that 45.36 level. 9.5 million shares. We've only been trading for 9 minutes. So far today, we're seeing in the case of Apple about 2 million shares. So it's really coming into that level too hot as we speak. But you can see it should have some decent support, a 0.618 retracement off of the next earlier breakout session with inside Apple. That's what took place here on July 24th. And if we take a look at the the swing point. It happens to be one session back earlier, which was on July 23rd. So we'll see if, in fact, this area of support, this first area of support, in fact, can hold for Apple. Let's go take a look at the IBM. Let's go see what it is doing. IBM having held its consolidation level and having done it very nicely. As we take a look at IBM, let's take a look at this both on a daily and a weekly chart. This may be one that actually got away from me, and I could kick myself in the head. But, you know, you don't necessarily catch every trade out here. What do I mean by that? Well, just take a look at this consolidation level. This is a nice 30-point consolidation level that IBM has been traveling within. And, in fact, if you take a look at, I've got the original breakaway, which was back here on January 20th, 2012. That's if you look at the bottom of my screen, that's the horizontal line that you see going across the bottom. Now, what we can see is as IBM was pulling back into that area, you take a look at the volume down here, nowhere near the actual breakaway volume with inside of IBM. That low of the consolidation right around the 182 level. Right now, it's trading out at 193. It is moving into an overbought condition. So what I'll be paying attention to, remember, you don't always have to catch every single trade right at the get-go. There's always going to be another opportunity. So IBM now starting to move towards an overbought condition. And what that says is that we should see IBM start to pull back. Whether it's today or it takes place tomorrow, Wednesday, it's moving into that extreme, well, it's moving towards the extreme level of the overbought condition. So it'll be, how does IBM actually pull back here? What do I mean by that? You know, if you take a look at some of the trades that my subscribers and I entered during the month of August, I think I've got some of them out here. Remember, you don't always have to catch every single trade out here. Let's take a look here at we'll take a look here is AG, which is, I got to type it in to find out what it is. It's off the top of my head. I knew I had it there, but give me a moment here and I'll go over this page right here. AG. Ticker symbol AG. It's I know it there. First Majestic Silver Corp. If we take a look at First Majestic Silver Corp, I didn't catch this one during the first move out. Here was a nice first move. This thing came off of the bottom back on June 26th. Was at a low of about $8.81. Made a nice move up to the July 24th high at $13.97. My clients and I, we went ahead and we picked up the second trade on this. We bought it at $12.12. We did that on August the 8th. We had a nice 29% profit. We got out of here during that key reversal session. We didn't wait until that session was over. We actually got out at 15.66. That made a low of 14.81 out there. And, my clients and I, we're just simply getting ready for our next round of trades with inside the gold and silver marketplace out there. Let's continue taking a look at things that are popping in. Well, I want to stay with inside. Actually, let me go back into the core area, take a look at some of these core stocks, see what they're doing. Let's go take a look at Google. I haven't looked at Google for a few days, so let's go see what Google is doing. Right now, trading out at about $891, so not exactly participating, not enthusiastic about this move up here. Google, if we take a look at retracements, what Google has done is it broke a little trend line here recently. It broke that trend line back on September the 5th out there. But if we take a look at retracements, in fact, I'll just go ahead and turn on this wonderful tool that helps to measure and identify. So take a look at this. So now we're going to take a look at, this is why you want to make sure that you understand your expansion and contraction Fibonacci numbers out here. We're taking a look at Google. And as we take a look at Google, coming off of the swing point highs back in the middle of July, all the way down to the August 30th level when it made a low out at the price point of $845. If you go from that high to that low, what you'll see is as price made a level on September the 12th, 2 trading sessions ago, up at the 897 level, it was making a 0.618 retracement of that large move out there. It was also making a 0.786 retracement of a smaller move, a swing point that comes from August the 6th down to the low on August the 30th. Now, what's also interesting, what stopped it in its tracks? Why does this work? I don't know. I just know that you need to be aware of it. You need to use it in your arsenal of trading. Well, it also happened to make a 1.618 expansion. Made a 1.618 expansion of a swing point that was on August 23rd. That That high was $878 all the way down to that same low in the end of August 30th, down at $845. So you've got three Fibonacci numbers coming together at the same time. How strong, how powerful do you think that is? Well, I'll tell you, it's very powerful, and you want to be paying attention to it. Does that mean that the move is over? No, but it does tell you that you should expect some overhead resistance. And when you're driving in a plane, maybe you're not flying the plane, and driving is not really the right vernacular out there, but when you are flying in a plane and you're the passenger, don't you want the pilot to be able to turn on the signal there that says fasten your seatbelts, because it may get a little bumpy out there? That's really one of the things that the Fibonacci Summation Index will do for you. When you start to see three numbers like this come together at the same point in time, that doesn't tell you that the market is going to reverse. It tells you, you know what? You're going to get some turbulence, and that's what we're seeing here inside of Google. So it stopped where it should. We'll see what the pullback is like. Now, if we take a look at Friday's action, came back with 1.3 million shares after making a high with million shares, but really trading inside the candle from September 11th with 1.61 million shares. So actually, the pullback so far, even though we've got some turbulence, even though it's doing a little dance out there, it's actually not too bad on the pullback here, and that is inside Google. Now, I'll switch over to Goldilocks, because we haven't taken a look at gold and silver. Then we come back to some of these core stocks out here. Why am I going to do that? Because we can take a look at the same thing here with inside of Goldilocks. Take a look at this. We've got a 0.618 and a 0.786 retracement that came together with what? A 1.618 expansion. This is the Google chart, only flipped over. How about that? So if we take a look at the low that came in here inside of Goldilocks, inside gold on Friday, got down to a price point of $13.04. That's going to be a very key level of support out there. If that area breaks, the question is, where is gold going to head to? Well, let's go take a look at the retracement off of the swing point from June 28th all the way to the high up here on August 28th as well. So how about that? Exactly 2 months. 1276 would be the next area of support. If that gets broken, you can take a look at 1233 as the price point objective for gold out there. But take a look at that 0.786, that 0.618, and the 1.618 expansion out there. So you want to make sure, and you can measure these. You don't necessarily have to have this automated tool. You can just simply use your retracement expansion ruler and just measure your swing points and understand where those price opportunities come. So 1304 is going to be a key level of support for gold. If we go take a look at high-ho silver out here, silver right now is trading out at a price of about $22.12 out there. That's up about almost 2% this morning, up 39 cents. You can see here silver has made the 0.618 retracement, had this nice rising price channel that was in, sliced through it here on September. This was on Thursday's session, sliced through it on September 12th, got back inside it. When you break a trend line, when you break a channel line, price is going to try to get back up inside here. That's what silver is doing right now. So it's going to be important for us to watch silver, because silver's actually been stronger than gold here. It's made a larger move, made a larger percentage move out there, and so we want to be paying attention to that. And right now we're going to see today whether or not silver's going to stay within inside, because you've got one test. You like to see, three tests of the price channel to determine whether or not it is going to hold or not, or trend line in this case, or trend line as well. In this case here right now, you can see silver is trading right at the price channel line. If it does not hold this level, where will silver pull back to? Another excellent question out there. Let's go take a look at it. We're going to go from our swing point low to high. That would say it would bring into play about the $19.60 or 70 cents out there inside of silver, and so we would use that as our range. If we take a look at the 1.618 expansion of swing points, because what you can see here is 1.414. We're going to call that a junior summation number out here. If we take a look at the 1.618, you'll see that lines up exactly with a 0.618 retracement, which is around $20.83. So that's a major level of support with inside of silver, $20.83. If that area fails, you'll see silver move down to about $19.60. 877-927-6648. So far, kind of a steady market out here. Dow is up 151. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 148 right now. S&P is up 13, and nice market breadth here for behind the move. Right now, you've got net advancing issues 2,566. Not net advancing. You've got advancing issues 2,566. Declining issues 276 on the New York Stock Exchange. That gives you a net 2,276. That is good market breadth behind this move out here. Let's see the leader percentage-wise. Let's see what's leading the charge. The Dow is up nearly 1%, and it is the Dow. The transports are up 1 2/10% out there. The S&P Volatility Index that is up 1 3/10% out there. We'll go take a look at the VIX. Maybe we'll do that. We'll save that for the next hour of the Money Masters show. Right now, we're taking a look here at the euro US dollar. We can see that gapped up this morning into the 0.786 retracement. The retracement that I'm referring to is all the way from the August 28th high. That was at about 1.345, all the way down. In fact, it made a low on September the 6th. If you take a look at that green squiggly line going across my screen here, if you are watching this in Tiger TV, close to the den out here, that's a 200 period. 200 in this case here, we're looking at daily chart, so a 200-day exponential moving average that seemed to have stopped the down thrust in the queen out there. If we take a look at retracements then from the low to the high out here, let's see if it made made about a 50% retracement. 200-day exponential moving average, that is acting as a good level of support. What happens when you gap up into a 0.786 retracement level? Sometimes that can be an exhaustion move out there. We'll see. Right now, though, it's really traveling with inside the swing point from August 20th, and so long as it stays with inside there, that range is 133.22. That's at the low part of the range. The upper part of the range is 134.50. Let's take about 134.50. So if it can't bust through the low, it'll go ahead and try and make a move all the way back up to the top. And that's going to be important because that is a large Gartley sell pattern out here. If we were to take a look at that, that's the large Gartley sell pattern that had formed right. I'll go ahead and draw that in on my screen out there. And that's going to be important because, let's see, was that a 0.786? I believe it was. It was about almost a 0.786 Gartley sell pattern that took place right back here on June 18th. The reason why we want to pay attention to that, at least inside the euro, is because when a 0.786 Gartley pattern fails, oftentimes it'll happen, folks. It won't just do a move of a move. It'll actually turn into a butterfly pattern. So it's going to be a very key level of resistance with inside the euro. Let's go ahead and get rid of that. We'll just simply go ahead and we'll peg this with a nice black line across because we've already had a test of that area, and the euro was not able to get over that. That was with some wide price spread. I was actually surprised that it was not able to move above the trading session from August the 20th. So it looks like to me it's going to take another run for that level. That level again being the highs from June 19th out there, right around the 134, 156 level. That is inside the queen. Let's take a quick look here at the U.S. dollar, Japanese yen. Let's go see what that is doing in the marketplace right now. Went ahead and moved lower this morning after completing the 1-to-1 A to B equals CD. It did that a couple trading sessions ago. Came with a nice wide-ranging bar on September the 10th. Let's take a look at the retracement here thus far, just on the C to D leg. See what we've got. It's got a little bit lower to get to in order to get to the 0.618 level. I'm going to take a quick peek here, see if I can do this quickly. We're going to take a look at the A to B equals CD pattern out here, and it is below the 0.382 level. So it does say the U.S. dollar Japanese yen wants lower price, probably right around the 97.50, 97.60 level. Folks, thanks so much for joining us. If you're off to start your day, have a marvelous Monday. Always remember, you have an amazing power within yourself. That power is so strong it'll create a life of abundance. But most importantly, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great day. Look forward to seeing you soon. Take care now.
Questions are the answer. You want a better life? Ask a better question. My driving force in life is, how can I become the intelligence behind financial freedom? It's why I take massive action. It's why I've invested over 10,000 hours and thousands of dollars to create the answer, the ultimate money machine. Hi, I'm Steve Rhodes, and on Friday, September 27th, I'll be hosting a one-day online master trader course, The Ultimate Money Machine, where I'll teach you the exact same trading strategies that I use every day when trading the markets and advising my newsletter subscribers. Learn how to precisely identify the market's next move, when to pull the trigger by letting the market commit to you before you commit to it, and how to manage your trade to maximize your results, just as we did in the month of August, when I advised my newsletter subscribers of 11 new trades resulting in one loss and a combined profit of 129%. Our next move, it's days away. The cost of this course, $595, less than $2.50 per trading session over the next year. If you're looking for the answer, it's the Ultimate Money Machine. All the details on the front page of TFNN.com.